Hey folks, Dan Fair here with your midday report in regards to real estate, especially when it comes to your financing options. So briefly, I want to talk about the rental market, how a lot of people are saying, their landlords are buying up the markets and, basically decimating those properties out there for people to buy to live in. So just to give you a context behind this, why are investors piling in and buying? Well, because there's equity there and there's a cash flow, but that might be changing finally. So we see here, April apartment market surveys show tighter conditions. Okay, guys, so yes, somebody commented today and said, well, all the data you use is old. Well, guys, I can only post as current as I can get. And this was just posted basically within about 5 minutes ago. So that being said, let's get on to it. So apartments market has tightened further according to the National Family of Housing Council, and it's basically saying it's tight. I can't sugarcoat it any more than that. So let's get over to this. Well, here's where I want you to kind of dive in on. Demand for apartments continue to exceed supply, resulting in the fifth straight quarter of the tightening market. Noted this context. Yet even as rent growth and occupancy remains elevated, developers are struggling to build more housings due to high cost of materials, lack of labor, obstacles in the supply chain issues, as well as increasing cost of capital, the money that they get lent to them or borrowed funds. The market tightening index came in at 60. So any reading above 50 indicates a very tight market. Okay, so it's substantially tighter. The sales volume is basically at break even. They're continuing to buy at the pace that they were, but that's starting to slow. The equity financing came in at 35%, below the break even point, indicating that equity financing has become less available. Why? Because a lot of investors now can't qualify because of the higher rates, but there might be a program in there, the DSCR. We have a program that allows people or investors to buy properties. As long as they're putting down 15%, they can use it as long as that property cash flows, you can still buy it. So if you're interested in that, please reach out to us. But they also say down here, a vast majority of respondents indicated that now is the worst time to borrow than 3 months ago because the debt financing index. Well, why basically is because rates are 2.5% higher than where they were basically 3 months ago. So that is it for just an update on what's going on with investors in real estate on the investor side of the spectrum. So now let's see, with all the news that came out today, what are mortgage rates doing? Well, we have the MBS down 5, but remember I said this morning, well, rates are probably going to get a little bit worse because we haven't had a negative index and the MBS market was down pretty sizably just a little bit ago. But it is recovering. But when rates were posted just a little bit ago, here's where they were. So let's go across the board. I'm going to show you the changes. Interesting change here is the ARM, the adjustable rate, moved in almost the same increment as the fixed. But let's go through this right now. So today's rates as of midday, 30-year fix is up 10 basis points, coming in at 5.4. The 15-year fix is coming in up 11 basis points, almost 1/8%. That's crazy, just in a half of a day. Okay, but at 4.83, the 30-year FHA / government loans, USDA and VA, we're just using this as basically a benchmark, is up only 2 basis points to 4.9. The jumbo, 30-year jumbo is coming in at 4.55, up 4 basis points. And like I said, the ARMs are adjusting as well, almost the same, or if not more than some of these indexes over here. It's coming in at 4.28, but we did have the trend for the day moving down to a minimal, so basically what I'm seeing right now is because of the recovery in the MBS markets, rates should stabilize and actually maybe even just get a hair better by the end of the day or by opening of tomorrow. So if you like the video, please, all I ask you to do is give us a thumbs up. Check us out on the web at therateupdate.com. We'd love to answer any questions that you might have in regards to anything real estate, especially all the financial needs that you might have in regards to buying, refinancing, or some suggestions on what you might do in regards to real estate. So that's it for right now. Don't forget our YouTube Live tonight. So the first segment of that, we are going to talk about VA mortgages. I'm getting a lot of requests for VA mortgages, and I have a gentleman that will be joining our team here in the next 30 to 60 days. He is a veteran. So he might be attending tonight. I'm not sure, but if he is online, I will call him out and introduce him to you guys. But please come and join us tonight at 7 o'clock for a Thirsty Thursday, where I answer all your questions when it comes to real estate, especially when it comes to the financing needs. So God bless, guys. Thank you so much. And I'll see you at 7 o'clock tonight.